What are the types of business strategy? Well, the first level of strategy is known as the organizational or corporate level strategy. This generally concerns the overall mission, vision of the company, its reason for existence, its underlying purpose. Oftentimes, this is related to things such as growth. So there might be a growth-based organizational strategy. This is common in startup ventures. There may be a stability strategy. That is, you are trying to maintain as a mature company to avoid the tumultuous nature of the product or service market out there. So you're trying to stabilize operations. There's retrenchment. And that generally appears in companies that are losing ground in the market. They are backsliding a bit, so you're trying to stop the backward regression by, again, reaching some level of stability. So rather than settle existing operations in your given market the way you would in a stability strategy, you are trying to change things in order to stop the backslide. You oftentimes see this in companies where their product offering is becoming obsolete in a way, or you see it in tech companies where new technology has come out and this causes customer or client preference to change away from their product. So that's a retrenchment strategy. And then you'll see some level of mix between all of these within individual or given divisions of a company or functional areas in a company. So next we look at competitive strategy. And when we say business strategy, this is what most people think of. They jump straight to, what does a business have to do to operate and compete in the given marketplace? Now, Michael Porter gave us the famed Porter's generic strategies, whereby he identified 4 types of strategies that basically combine any efforts of a company to compete. The first being cost-based strategy. And don't let this name deceive you. It's not about charging a lower price to customers. It is about establishing a lower cost base for the company. So if you have access to resources at a lower price, or your distribution channels allow you to reduce the cost of carrying on operations, this can be a competitive advantage over other businesses who do the same thing or offer a similar value proposition. So you are lowering your cost structure. Now, this may translate into a decision to charge a lower price to customers, but not necessarily. You could keep your prices higher and simply have a higher profit margin. So now you have more resources to compete against other companies. So there's the cost-based strategy. Next is a differentiation strategy, and this is the most broad. It simply says that whatever your value proposition is, you differentiate yourself from competitors, from other companies that do the same thing. So how is your product or service different? Is it easier to use? Is it more convenient? Is it faster? Is it smaller and easier to store? Is it simpler? Any of these things can be a source of differentiation. Luxury goods, for example, differentiate themselves by having some level of exclusivity. The high price means that only a select group of people can afford to have the thing, and that level of exclusivity differentiates. It may not be a differentiating quality factor, or even how nice the luxury good functions or works. It's all about who can have it and who can't. So once again, this is just an example. You're differentiating yourselves from other products in the market. And lastly, a focus strategy. And this is where you focus on a niche market. You're trying to address a customer segment that is not primarily being addressed by larger competitors. And that segment is large enough, and there is enough potential value serving that segment to offer them out type of value in return for your goods or services. And within a niche market, you can either be low cost focused, so you outcompete other competitors based upon the cost structure, or you're differentiated from competitors that are already serving that niche group. So that's competitive strategy. Next is functional strategy, and this is often combined with the 4th strategy, which is called operational strategy. But basically what it looks at is how you achieve your objectives. Okay, how does a functional group within the company, and this could be a manufacturing group, it could be a professional services group like the accounting department, How do you achieve your objectives? Generally, it focuses short-term on nature and very heavily on tactics as part of a plan for achieving objectives or goals. So how are you going to do things? When people talk in terms of strategy as a plan of action or a course of action, generally they're talking in terms of functional strategy. And if you don't have functional groups within the organization, you may look at the exact same thing at an operating level. That is, all of the groups that come together to provide the value propositions, to carry out the company's operations, and you look at the same things. What are the activities that have to take place? In what sequence? How often? With what regularity or speed? With what quality? All of these things that go into a strategic plan for how you are going to achieve the objectives you've identified for that operating group. So oftentimes functional strategy and operating strategy are grouped together. So you can say there's either 3 or 4, if you break out operating strategy from functional strategy, types of strategy. But it's important to identify that the word strategy is used differently from each of these. At the organizational level, it tends to be high-level, broad focus, very much related to an overall reason for being, the purpose of the company. Business level strategy is competition. How are you beating out others in the marketplace? And functional or operating strategy is how you carry out the things you want to do in order to meet the organizational objectives. So these are the types of business strategy.